Let's now connect with the management of GCPL. Aasif Malbari, Global Chief Financial Officer and President, Africa, Middle East and International Businesses, joins us. Aasif, good morning. Thank you for joining us. Now, overall Q3 numbers have been in line with what the street was expecting. However, margins have seen pressure and overall volumes have been flat. But when do you expect to see the margin recovery and volumes to improve?
At an overall basis, all the structural actions have gone off well. But yes, the quarter is kind of coming low in terms of the volume growth. Yeah, so that's really in terms of volume. I think if I had to kind of look at it in future as to how does this pan out, definitely we should see a sequential improvement coming through in our numbers. Quarter 4 is expected to be better than where we are today, and by H1. I'm hoping that things start kind of normalizing as prices start settling down, commodity prices start settling down, and also, some of these temporary headwinds kind of move away. So that's on volume. Moving on to margins, if you look at our performance actually in terms of overall consolidated margins, we've delivered close to 20% overall EBITDA, which is quite nice from an overall consolidated GCPL perspective. We historically have operated between 18 to 22, so we are in the middle of the range in terms of margins. When it comes to India, we are on the lower side of the margins. Historically, we operate between 24 to 27. We've delivered around 22 and a half. So yes, we are lower. It's likely that it'll take some time for these margins to recover because there is still some bit of a catch-up which is happening on the cost side. But as we get into, again, first half of FY26, margins should be recovering by then.
Right. Asif, the household insecticides category has seen some pressure in Q3 despite being an outperformer last quarter. What's led to this pressure that you're seeing in the first half, and do you expect any recovery going forward?
No, so as I was mentioning, I think we are overall very happy with with our actions in household insecticides and how each of the individual products has performed. Household insecticides has been a stellar of a performance, been received very well. It is the only government-registered insecticide in the market, and hence, as more consumers are coming to know about it, they are moving from the what I would say unregistered illegal kind of insecticides to this product, and we are seeing a great traction as we kind of distribute more. A new product in terms of the liquid vaporizer machine, which we have launched with a new product formulation, is also being received very well. We are gaining market share in the segment. So in the relevant segments, we are doing well. There has been an overall seasonality impact, which we've seen in this category. But these things are temporary. They should kind of reverse off.
So what is your outlook on the input cost inflation now that the palm oil prices have already gone up by 40%? How do you expect these prices to cool off now?
No, so I think of late we are seeing some kind of weakness in the commodity prices. There have been a mild correction which has happened in terms of overall palm oil. Some of the byproducts which are being used in our category is still slightly elevated. So it should consolidate it at these levels, if not reduce. And hence, I think gradually we should be able to catch up onto what our target kind of margins are, and we should be able to complete the pricing actions soon.
Right. The other thing I wanted to understand, Asif, was also about, the fact that you've undertaken, some price hikes and grammage changes as well in the soaps category. Despite that, volumes have been muted. What's the reason, and by when is it that you expect the growth in this segment to improve? And how much of the increased costs have you been able to pass on to your consumers via price hikes?
I think on the price hikes, a portion of the cost increases have been passed on, but there is still some kind of additional pricing, which will have to be taken to kind of offset the full impact of the commodity increases. We do see this getting completed over the next few months, depending on depending on how it all stabilizes in the market. I think so. That's the way of it.
H2 could be operationally better than H1. Is the worst behind us when it comes to multiple headwinds we have seen, be it raw material inflation or slowdown in urban demand?
So I think in terms of our performance, I think we do believe that we should see a sequential improvement as we proceed into Q4 and into H1. Yeah, because these are temporary tailwinds and structurally actions have kind of are moving in the right direction. Yeah, so we do definitely believe as we go along, there will be an improvement in the growths as well as in the shape of margin.
What's your outlook about urban consumption and demand? While we've seen sluggishness when it comes to rural, are there signs that it's picking up?
So you're right. There has been a bit of sluggishness in terms of urban demand compared to a few months back, and that is impacting a lot many categories. We are seeing that from multiple statements from various companies. Yeah, compared to that, rural is relatively doing better. We hope that with various inputs coming in from multiple quarters, including the budget, urban consumption starts kind of moving up again, especially in the urban middle class consumption.
Talk to us about the international business. While Indonesia has done well, your GAUM?
So if you see the last quarter, we've seen a strong performance in Indonesia. We've seen a strong performance in LATAM. Both these businesses have done well in terms of both revenue growth and in terms of profit improvement. They have been in double digit. If you come specifically onto the GOM business, the GOM business over the last 4 quarters has actually had a very good run in terms of profitability. We've delivered close to 15% EBITDA margins in the last 4 quarters compared to the single-digit EBITDA margins which we had historically. So there has been a huge reset in terms of profitability, and the absolute profits has also significantly gone up over the last 4 quarters. So we're quite happy with the way we've been able to shape the improvement in the profitability in the GOM business. The growths have been lower for the last 3 quarters because we've taken conscious decisions to reduce the trade inventory which we have and make the operations more efficient. And also there have been some currency impacts which happened around a year back. And we had indicated at that stage that it will take a year on the top line impact of these in INR terms. As we speak, these are kind of now behind us. We finished most of the actions on the trade correction and the currency impact is behind us. So I think going forward, we do expect this business to kind of grow top line and sustain the profitability levels which we've been able to establish it at.
Could you also give us some visibility, Aasif, on the volume growth by the end of the year? And if you could share a number as well.
Sure. So I think, as I said, definitely Q4 should be seeing a sequential improvement. I think, yeah, I wouldn't kind of put out a guidance, and definitely next year by H1 we should see a further sequential improvement from Q4. Possibly towards the end of the year, as we've closed this year, we could kind of talk about a guidance for next year.
Right. Okay, Aasif, great to have you on the show. Thanks as always for speaking with us.
If you like this video, then like, share and subscribe to ET Now.